Holy shit, ladies and gentlemen, cost to borrow rates are now over 1,000% yet again. Every single time, without exception, this has happened. AMC stock has rallied, and I think it's no coincidence that AMC is starting to catch a little bit of a bounce today, now up about 2%, whereas the markets are actually falling. Something like Apple down 1.5%. You wouldn't expect an AMC up over 2%. Now, I think this is only just the beginning. I think the markets are firmly going to realize what AMC is doing is crushing the short thesis in real time. And we'll talk about that here in this video, but mainly I want to give you guys an intraday update on all of the data and numbers that you need and want to know with AMC, as well as the data that came out on the markets today that is showing the economy is continuing to contract. And a lot of this, we've talked about the collateral crisis that is going to take place in AMC stock. This 25% short interest of free float is only sustainable to remain in those short positions if the collateral holds up. If these hedge funds need to start dealing out more collateral, more dollars, more dollar hollers over here, it turns into a pretty bad situation for the shorts very, very quickly. So we're going to get into all of that. Don't worry about it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section if you have not already. Now, if you guys also want to take it a step further, come trade with me live in real time. Link down below in the description of this video as well. Great place to be. We're making money over there. It is all in good fun as well as good money. We like to hear that, but I am not a financial advisor, so come to your own conclusions with all this information. Nothing is a guarantee, obviously. Quick disclaimer there. Now, let's first off get into what is happening here in the markets today, because this is really what is causing this broad pain in the markets today. Now, obviously, with AMC, you're in the green. You're now above $4 per share. There's some very positive things to say on that front. But as far as the economy, there's not too many positive things you can actually say. Now, I'll tell you first things first. Bad news is turning into bad news, whereas in 2022, bad news was seen as good news for the stock market because that meant inflation is going down. Well, now that you're heading into a recession and there's fears about a recession and earnings slowing down and valuations being overstretched, quite frankly, I think you're in a technology bubble right now. Bad economic data is starting to be bad news for the markets, and that could set us up for a string of bad news, potentially heading the markets down much lower than where we currently are over the next couple of weeks, next couple of months, and ultimately could help squeeze that collateral from these hedge funds and cause shorts to cover on their short positions, especially as the cost to borrow rates are heading up even higher and now over 1,000%. So, private payrolls rose by 145,000 in March, well below the expectations. Expectations were for 210,000 private sector jobs to be added. It came in well below that. 145,000 is not good. You had 261,000 for February as well. So March numbers are not looking good. It says financial activities lost 51,000 jobs and professional and business services fell by 46,000 jobs. Leisure and hospitality added another 98,000 workers. Trade, transportation and utilities grew by 56,000 and construction rose by 53,000. So overall, you're still seeing job ads here, but I think very shortly markets are looking at this like, hey, you could start to see these travel, leisure, hospitality sectors that really overhired over the last year start to see some contractionary numbers. And when those numbers come in, it's going to look very bad for the economy, and it's going to have very bad effects on personal spending numbers, right? The economy, at least the American economy, is all about spending. If people are starting to lose their jobs, well, that's not going to be a good thing. Now, also, what you did get today is the PMI services and the manufacturing data that came out today was also very contractionary. You see the deficit. Let's go ahead and refresh this, make sure we have the most up-to-date information. First things first, and make sure we are on Wednesday. The ISM non-manufacturing PMI came in at 51.2. You were expecting 54.5, so you're almost in contractionary levels, and these are worse than what you have seen over the last years, right? Over the last year and a half here, and this is even worse than when GDP was negative 2 quarters in a row in 2022, when we were in a technical recession but not declared an official recession. You're seeing some manufacturing numbers that are worse than those numbers. So you're starting to get signs the economy is progressively getting much worse. Now, tomorrow, let me give you guys a quick rundown. You're going to have initial jobless claims coming out for the week of April 1st. That is my birthday, so we'll see what happens with that. It could give us a big reaction, especially if you do get a big swing here. You are expecting 200,000 initial jobless claims, although I don't think we are going to get a big swing just because it's on a week-by-week basis. That would be a very concerning sign if you all of a sudden had a bunch of initial jobless claims. Would not be a good thing. Now, and just depending on what side of the boat you're on, if you want the markets to fall, well, that would, I guess, be a good thing for you guys. Now, Fed Bullard also speaks at 10 o'clock in the morning tomorrow, and that will be very, very important because what he said throughout 2022 was important. He was the most hawkish member of the Fed during that time. So what does he say now? Even though he's not a voting member, it could give you some insight to Fed policy. Now, what is very interesting about Friday is you're going to have the unemployment rate as well as the non-farm payrolls for the month of March coming out on Friday, 8:30 in the morning. But guess what? Markets are closed on Friday. So this is like the first time in a very long time where you're going to get big economic data when the markets are closed. I can't recall a time in the past where that has happened over the last year and a half. You're always open for trading when major economic data comes out. So I think it throws a curveball in a lot of this. Either tomorrow could price in that move. You might get a big move tomorrow up or down, or coming on Monday, you're going to get that big move up or down. Now, next week also starts bank earnings. Next week on Wednesday, you have CPI, right? Some other important data points. So it's going to get very wild from now until the end of next week, and over the next couple of weeks when you have earnings. That's where shit can essentially start to hit the fan and just start spinning shit everywhere. Not potentially a good outcome there, right? Everyone's going to get their hands dirty, essentially. Now, let's switch gears because that's what has happened so far on the day today. And actually, last thing I want to say on that front is the bonds. The bonds are continuing to go higher here today. You've been on a green streak here with TLT. You can see, let me push this over so you guys can actually see and hide my head here. You've been going up like 0.5% a day, some days over 1% as of recently. Now, this means yields are going lower. Why are yields going lower? Some would say this is good for stocks, good for technology. And in a normal market, maybe that would be the case. But as recession fears grow, people are flooding into bonds. This is seen as a safety trade, whereas yields are going down. Sure, makes capital a little bit easier to get your hands on, but if yields are falling and people are buying bonds because they're scared and a recession is coming, that is not a good sign for equities. And if you really start to break out above this really 108.50, 109 level on TLT, you're sitting at about 108 right now, so you're about 0.5% give or take off of a breakout point. You can see just how critical this will be. If you start to break out, this could trigger a lot more downside here in the markets. After all, this kind of led us up during August and over the last couple of rallies we've seen in the markets, but once it really starts to break out, not seen as a good thing. So there you have that. Last thing I'm going to say on the broad markets. Now, if we switch gears and talk about AMC, because oh boy, holy shit, here we go. Live short interest of free float sitting at 25.11%, up 0.08% on the day. The amount of shares currently sold short sits at about 130,110,000 shares. Looks like are sold short here today. Cost to borrow average at about 500%. Cost to borrow max at 1,030%. 1,000%. Every single time this has happened, AMC stock has rallied. I think this time is no different. Cost to borrow minimum at about 8%. Interactive Brokers has the cost to borrow rates at about 350% last update that we did get, which was April 3rd. 200,000 shares that were available for trading then. The option activity, 0% positive order value, 26 orders totaling $23.7 million. Now, I think a lot of people here are going short on AMC when in all reality the trade is over. The trade is realized. The arbitrage trade is donezo. It is done. You have realized all of what you are going to get out of this trade if you are a part of this arbitrage trade. So why are you still going short on AMC? That makes absolutely no sense to me here. It's firmly priced in that this is going to go through. The markets are a forward-looking instrument, and that leads me to believe these hedge funds really have no clue what they are doing. And after all, I think the markets are firmly going to start to realize that AMC raising capital, number one, like Mario Plume said in the trading group, private trading group, link down below in the description of this video if you guys would like to join it as well. What he says is, number one, when AMC announces how much capital they raise, that's a positive thing, or in his words, that is bullish. His words also, that when AMC announces what they want to do with their capital, with their freshly renewed billions of dollars in the bank, that's super bullish. And I 100% agree with good old Mario over there, because that's exactly what has caused AMC to rally every single time they have raised capital. Now, this time is a little bit different. I know those are dangerous words to say, because if AMC can pay off all of its debt or a majority of its debt and redivest into their business or other business ventures, well, the short thesis is dead at that point. It is dead on arrival. So why would you be short on AMC at that current moment in time? Doesn't make a whole lot of sense. Now, people make the argument that GameStop, yeah, they just had their first quarter profitability. Look at that stock, right? Their first quarter profitable, boom, up 50%. Well, I think you'd get something bigger than that on a more colossal level with AMC stock. Now, you guys got to remember as well, GME was the first to go, was really the first to make the headlines, first to get the attention, but really AMC has took that ball. They're like the streaker on the soccer game, right? They done ran off, AMC done ran on the court, stole the ball, and yeah, now everyone's watching the streaker. They're watching AMC now, and AMC has the ball in their court. So I do think in terms of kind of recognition and attention, AMC is definitely the top dog there, and I think they are the ones that would benefit the most for sure. And I think there's a lot more people that know about AMC that are invested in AMC that would kind of cause the rally to happen and help, again, squeeze these shorts from their short position. So I think when all is said and done, you got to be pretty bullish on AMC right here and right now, especially if you were over the past couple of weeks. You've just had a chance to get AMC a lot cheaper, and now we're even going to get a settlement out of this situation, hopefully sooner rather than later. Apparently, before the reverse stock split ever happens, you are going to get your shares. So we'll see what the courts say on April 27th. It's all still up to the court's opinion if this is fair for AMC common stockholders. I expect there to be another court date. I think that would be bullish for AMC here in the short term as well. But I really see this as a win-win scenario, and I think the markets are starting to look at that in the same light as well. You can see AMC stock continuing to rally higher here today, up about 3%. Even APE is up about 1%. Now, AMC still sitting under its 450 support level we were previously sitting at, but it is above $4 per share. It's at $4.03 per share at the time of recording this video, and it looks like we might start to make a slight uptrend here until we get some new information, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.